The national housing markets continue to rise and house prices once again have risen over July. That's 6 consecutive months now. If you've been a regular subscriber to our weekly Property Insider video chats or a subscriber to my podcast, you'd know that earlier this year, Dr. Andrew Wilson tipped that the housing markets would change direction and house prices would rise when many others were forecasting property Armageddon. And now that we're a little over halfway through the year, today he's going to share his latest housing market reports. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can keep you up to date each time a new show comes out. I'm going to start this session with something a little controversial. If you want to be successful in property, ignore most economists. In general, the ones quoted in the media work for the banks or major institutions, but they seem to have no clue of what's happening in the real world outside their big CBD towers. Well, that's most of them. There are actually some excellent economists who know what's going on, like Dr. Andrew Wilson, chief economist of My Housing Market. Just go back to the end of last year when the Reserve Bank suggested house prices could plummet by 15% or 25%. At the same time, the National Australia Bank forecasted 20% fall, Westpac forecast a 16% fall, and ANZ thought property values would slump around 18%. But late last year, Dr. Andrew Wilson had a different view. He saw the rate of house price falls decreasing, and he saw asking prices rising. And earlier this year, he called a market bottom. And now, over half a year later, the banks have changed their views. For example, just recently, the National Australia Bank updated its forecast, predicting a 4.7% increase in home values by the end of this year. That's right, just 9 months after they said values would fall 20%. Now they're saying they're going to rise 4.7% and 5% next year. Oh, by the way, many markets have already surpassed that. If you're a regular viewer of our weekly Property Insider video chats or a subscriber to my podcast, you'd know when others were tipping property Armageddon, Dr. Andrew Wilson forecast a change in direction of the housing markets. So now that we're just over halfway through the year, I'm keen to hear his latest report on how our housing market's performing. Hi, Andrew.
Yeah, good day, Michael. And dare I say it, what a wonderful introduction.
Now you've got something to live up to.
Well, thank you very much. But look, it's not just throwing a dart at the dartboard and getting lucky by getting the bullseye. It is all based, as we discuss every week, on data and historical evidence. And it's sort of easy to, I guess, offset the doom and gloom which characterises commentary generally about our housing market by just following the facts and the data and looking at historical evidence. And those predictions were quite nonsensical that you described, given the historical evidence that we have in regard to how resilient and robust our housing markets are. Given we'd just come out of a strong boom, that our economies were booming as well, it really was going to be a short and sharp correction period, and that proved to be the case. And of course, we know when we look at the balance between supply and demand, that is clearly skewed in favour of demand, and only adding to demand has been open borders with surging migration in what is still a clearly undersupplied housing market. And we've now got the latest data for July. So first with the latest, of course, My Housing Market. And although we're continuing to see price increases, Michael, the rate of growth has moderated over the July quarter compared to the June quarter. And we shouldn't be surprised at that, because typically we do see a moderation and easing in housing market activity through the middle of the year, because it is a significant holiday period. We do see a change in the mix of properties being offered for sale through the winter market. Typically, it's skewed more to lower priced areas, with fewer listings as a proportion of the market in the higher priced areas. But notwithstanding those constraints that we typically see, those seasonal constraints, in the middle of the year, we're still seeing prices increase, Michael. And I think that does reflect the robust nature and the catch-up energy that are still driving our housing markets.
Well, when we dig into the figures and see what some of the markets have already performed, it would be unreasonable to expect them to continue at that rate at this early stage of the property cycle. If that did happen, it would actually be a much shorter, sharper cycle, and I'm much happier. Things are slowing down but still growing consistently, Andrew. So let's dig into your latest figures.
Well, the national house price increased again over the July quarter, Michael, compared to the June quarter, up by 0.7%. And that wasn't as high as the result we had over the June quarter, the previous June quarter. But that was the strongest growth rate that we've recorded for the year, the June result. So the market has come back, as we said, not surprising given the constraints of the mid-year market. But it is the sixth consecutive increase in house prices for the national market, Michael. And we now have the national market ahead of where it was over the July quarter last year. So annual price growth is now in the black, up by 1.1%. National house prices, Michael, have increased by 4.9% over the first 7 months of this year. So I guess we're on track to perhaps get almost a 10% increase in the national house price this year. Now, we're probably getting a little ahead of ourselves predicting that result because there's still some water to go under the bridge, particularly in terms of interest rates. But certainly it's a lot different to the prediction, significantly different, not just in direction, but also in the rate of growth that was predicted by many last year, as you mentioned. When we look at the capital city breakdowns, interestingly, the weaker markets, although still growing, were Melbourne and Sydney, and we expect that that is a result of that midwinter, I guess, pause in activity in certain sections of the market. But Brisbane took up the mantle. It increased by 2.3% over the quarter to be the leading performer. And other markets were that increased, that grew, where prices grew. Darwin, Perth, and Adelaide recorded modest to moderate results. When we look at this year so far, Sydney's clearly out in front, Michael, up by 7.7% since December, which is a very strong result, and certainly on track to exceed 10% now this year in growth. Melbourne up 3.1%, Brisbane up 4.2% this year so far, Perth up 5.2%. So these are very solid to strong numbers for prices growth recorded so far this year. And of course, when we look at the full year, we now have Sydney ahead of where it was a year ago, up by 1.2%, Adelaide up 1.4%. The big increase has been the Perth market, where house prices are up by 6% over the year. And we only have Brisbane, Canberra and Hobart, where prices are still below where they were a year ago. Having said that, Michael, we must point out that peak prices are yet to be achieved again in Sydney and Melbourne. They are closing in quickly on peak prices, which were at the top of the boom last year over the March quarter. And I expect those peak prices to be gained, particularly in Sydney and Melbourne, over the next few months.
Well, apartments run a different cycle to houses. Affordability creates issues. How people want to live creates issues. And during COVID, people moved out of apartments and looked for more space, not wanting to live with other people or press the same buttons in lifts that others did. But even the apartment market's done pretty well recently.
Yes, Michael, and it is tracking houses. We've seen the national apartment price, unit price, up by 0.5% over the July quarter compared to the June quarter. That again, and similar to houses, is the sixth consecutive quarterly rise, month-to-month rolling quarterly rise in the median unit price. That's the same as houses have recorded. Also, national unit prices are now higher than where they were a year ago, up by 0.8%, and national unit prices have increased by 3.9% this year so far. So some pretty good news still there for the unit market, Michael. And we only really had two capitals which had lower prices over the July quarter compared to the June quarter. Perth down by 0.7%. And Canberra down by 0.2%. And of course, that Perth market. But nonetheless, I don't think that the unit market is suffering or is in the shade compared to the house market in terms of prices growth. And the big performers this year so far have been Adelaide, where unit prices, again, that Adelaide market, similar to Perth, is a small unit market. But nonetheless, unit prices in Adelaide are up 10% so far this year. And Sydney prices are up 4.9%. And Brisbane prices are up 6% so far this year, Michael. So, as I said, still some reasonably positive news there in the unit market, which, similar to houses, despite the mid-year, I guess, hiatus in focus on our housing markets, is showing no sign of slowing down.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now, remember, property investment's a process. It's not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Clearly, interest rates have been the focus of a lot of commentators over the last year or so, and that's one of the reasons they were suggesting our property values were going to crash. But there's a lot more than interest rates that drive our property markets. Supply and demand, strong economy, everyone who wants a job's got a job. That's been some of the factors involved. Of course, the big immigration. But the most recent CPI figures have surprised on the downside and pleased people. So we're not out of the woods yet, though, with interest rate rises, are we, Andrew?
Well, interest rates are a significant factor in terms of housing market activity, Michael, but more so significant in terms of the mindset of buyers and sellers rather than affordability. We must remember that many buyers in the market actually don't have a mortgage to worry about. And those that are a majority of the remainder that do have a mortgage are lowly geared. So higher interest rates can be absorbed. And we know that there were high savings levels accrued during COVID. That's helped to offset higher interest rates. And of course, wages have been increasing at the fastest rate due to that strong economy, as you mentioned, at the fastest rate in over a decade. So these are clear offsets to the impact of higher interest rates, Michael. And look, I think that the Reserve Bank has been certainly wavering in terms of its outcomes for interest rates. We've had 2 pauses over the last 4 months, and that's got to be a positive for confidence and for affordability in our housing market. And I think that's part of what's kept, I guess, our housing markets turning over has been those 2 pauses that we've had. But the latest data certainly continues to show that the battle against inflation is nowhere near one. Underlying inflation, although it's eased, is still at 6%, Michael, which of course is double what the target is, and the target's 2 to 3%. It's going to take some time, even at the current declines, to match that 3%. And the only real change we've had in headline inflation has been as a result of a significant fall in fuel costs, the international price of oil. And we're also now finally starting to see house building costs falling, which does make up a significant part of the basket of goods for the inflation rate. Now, those 2 adjustments, Michael, would have happened without interest rate increases, let me tell you. So the interest rate policy hasn't really affected the inflation rate fundamentally. In fact, higher interest rates and higher costs to incomes of those with a mortgage may have created the incentives to bid up wages, and therefore having bosses, employers having to cover those higher wages without the usual productivity benefits, and therefore having to pass those higher wages on to higher prices. So there's an argument perhaps that higher interest rates have actually accelerated inflation. But nonetheless, the battle against inflation isn't one. I think that we will see higher interest rates into the future. We have a very strong economy, Michael. There's just no sign in any of the real economic data that this economy is slowing down. In fact, the data is looking like it's strengthening. So I don't know what the plan for the new Reserve Bank is now, but certainly if the plan is to increase interest rates, reduce demand, impact the labour market to see inflation fall, they're going to have to continue to increase interest rates. But as we said at the beginning, Michael, higher interest rates aren't necessarily the bludgeon on the housing market that many think it is. And history proves that to be the case. But certainly we have very robust results continuing in our housing markets. And we've really only got 1 month of winter to go in that sense. And then we're into the spring selling season. And I expect particularly the mid to higher price sections of the markets to become active during that period. And they're the markets that still have plenty of upside potential, in my opinion. But, really, it's still all positive for our housing markets going forward. Prices continue to rise. The underlying factors, such as strong economy, continue to be significant driver of a reviving housing market.
Not just the stronger economy, but also the surging migration.
Yes.
And the supply and demand equation ratio with no end in sight, with very little new supply coming on the market, supplying the buying market as well as the rental market. So we'll be back each week with our regular Property Insider chats, but this week it's a little bit earlier because we're bringing the news about what's happening in the housing markets over July. Thanks for your time, Andrew.
Yeah, thanks very much, Michael.